Crypto Hotep here with another investing video. We are on week 75 of the Family Portfolio and Dividends Tracker. I'm going to try to do these intros, try to be very quick and precise with these intros, and not be so long-winded here. So if this is your first time watching the video, go to the channel, go to week number 1, and then that way you can see the reason why I'm doing these videos. Also to see where we began at and where the balance of this portfolio began at. And basically right now we're just tracking the investment journey with me and my family. My family chose a handful of stocks. We then used M1 Finance as our broker of choice, and every week we go through these stocks, the portfolio, the balances, any big news that we have on the markets and how we're feeling, just to track that investment journey and obviously to build generational wealth as well. So if you like these videos, feel free to like, subscribe, comment. Let me know what you think. It helps the algorithm. Please share the video. Do whatever you need to do to get the word out. It helps this channel a lot. So before we go to week 75, we do go to week 74 and we see where we were at. So week 74 saw us with a balance of $3,000, $3,061.76 for a money-weighted rate of return of 11.22% year to date. We had about $20.80 dividends earned and a market gain of $230.67. So with this, we'll go to this week. But before we go to this week, there was some big news this week in terms of market news. So inflation numbers came in, or CPI, Consumer Price Index. Those numbers came in, and those numbers came in actually today with year-over-year CPI being 2.9%, which was in line with its expectations. So if you're unfamiliar, inflation numbers typically come out and they'll have a forecasted number, what they're expecting, and then they'll have the real number when those numbers get unveiled to the public. So basically what this means is forecast was on point with what they were expecting. So why is that big? Well, that means that we're still pushing forward for that interest rate cut next week that Jerome Powell hopefully will announce. And right now it looks like we're going to just rate cut at about 25 basis points for next week, which is fine because that could potentially start more interest rate cuts. And the big thing with the interest rate cuts with stocks, equities, crypto, those type of things is the interest rate makes borrowing money and debt easier and less costly. So businesses, for one, can actually borrow money at a cheaper cost, just for things like payroll, hiring employees, and those type of things. And then also investors can also borrow money cheaper by cost basis as well. Then that way they can put more money into the market. And in addition to that, as those interest rates come down, money that is in secure or quote unquote safe accounts like high yield savings accounts, money market accounts, accounts that you're guaranteed a certain APY interest, unfortunately that interest rate's going to go down, and then consumers will look towards other places to put their money, such as Bitcoin, gold, silver, crypto, stocks, what have you. So with that being said, we'll go to week 75. Week 75 saw our balance jump up to $3,097.07, almost at $3,100. Money weighted rate of return of 12.14%, so we're up there. Market gain of $251.66 and dividends earned of $22.06. So we're kind of moving right along here. It feels good. It does feel good, I will say that. This portfolio was in the single digits for a lot, and I was unaware where we were going to finish at, but we're looking pretty good, and this chart just looks fantastic. This is what you want to see from your stock or equities portfolio right here. This looks pretty good here. So let's see what we're doing here. So since September 3rd, which was last week, what happened? So we did have some dividend activity, which is nice. We had Moodys. Moodys was in my financial sector in my portfolio. We received a payout of 17 cents. And then Microsoft, we received a payout of 15 cents. Now again, first time watching this video and you're laughing at these dividend payments, just understand dividend investing, which I do like to actually do. I do like to dividend invest with my stocks. I like to really pinpoint dividend stocks because I like the fact of quote unquote making money while you sleep when you're holding these stocks. But the caveat is with dividend investing, it's a snowball effect. And sometimes that when you start off, that snowball can be very, very small. So you want to ensure that you're just continuously getting those dividends, but also continuously investing in that said company as well. Because as the asset grows up, or the company holdings like Microsoft, as that grows, this is going to grow too. So we were blessed with a deposit too. We deposited a little bit of money here and we had some buys. So we have 4 buys. We bought some McDonald's, some Target, Starbucks, Visa, and Pepsi. Okay. And let's go to the portfolio, guys. As we always do, we go top, or I should say bottom to top. Bottom here is our middle, but everybody is in the green, which is a beautiful thing here. So our middle has a balance of $377.69, money weighted rate of return of 5.38% year to date, market gain of $11.21, dividends earned of $2.62. So as of right now, the main culprit, as with our middle stock in the past, it seems like several months now, has been Target. That's the Achilles heel right here, as you can see, double-digit negative with our middles portfolio in Target. Why am I not concerned with that? I believe Target is on the turnaround, and I believe Target is still a good company. Okay, we've also been in this particular spot with Tesla, and as you can see right here, Tesla's now year to date in the green. Again, there's been so many weeks where I've said, hey, we're closing the gap, we're closing the gap, we're closing the gap on Tesla, and we did close the gap, and we're shooting to the upside right here. Sony up over an impressive 34%. Starbucks still down over 10%, but I think that one's closing the gap too. And then Amazon up over 8%. Costco is very consistent. It's going to do what it does. So not really concerned with our middle portfolio. Nothing really sticks out, even though Target is a sore eye right now. Our youngest still has the balance of $415.18. Money weighted rate of return of a very impressive 10.38% year to date. Dividends earned of $1.56. Market gain of $28.09. So Tesla, again, guys, you're seeing here, we closed the gap on Tesla for everybody. So up over 6.92%. It's been a hard road with Tesla this year, buying in at the dips, buying in when we were red, just buying and buying and buying. But again, when you believe in that company that you're buying, you understand that company and you believe in that vision, it makes it a little bit easier. Not simple at all, but it makes it a little bit easier to buy that company and also be the bearer, or the receiver, I should say, of those fruits, which are these gains right here that we're seeing creeping up with Tesla. Sony almost up 40%. Costco's up over 7%, very consistent. And then, guys, guess what we did? We closed that gap on Apple. So we are up in the green on Apple now. Apple just had their unveiling of iPhone 17, coming out with the thinnest iPhone, and I believe there are 2 more models of iPhones. There's a curved model as well. Then they also updated the AirPods with live translator, which is fantastic. That is a fantastic feature of those AirPods. So a lot of good stuff with Apple. And then Starbucks down a little bit over 11% with Starbucks. Again, not concerned with that. Okay. Let's go to my wife's portfolio. Here up over $400 at $418.47. That's not a typo. Year-to-date money weighted rate of return is 47.88%. Man, if we had more money in this portfolio, I'll tell you what. Market gain of $98.53, Dividends earned of $2.42. Again, very simplistic portfolio here. Only 4 stocks. Pepsi, up in the green. Google, up in the green. Tesla, finally, up in the double-digit green for Tesla. And guys, remember, I said this last week and the week before that. I said when Tesla, because my wife's portfolio was 3 out of 4 were green, and I said when Tesla, we were closing that gap. You're going to see me saying it, but closing the gap on Tesla, my wife's portfolio is just going to keep going up. It's just going to keep going up. And that's what's happening here. Tesla has finally turned green, and all hands are on deck. You know, our portfolio is up over 47% year to date. That's tremendous. Celsius is holding the portfolio up, I should say. Not holding it down, it's holding it up at over 133%. Money weighted rate of return year to date of Celsius. Just crazy. Very impressive. Our oldest cracked that $900 mark last week, and it still holds true today. So over $900 at $907.05. A money weighted rate of return of 1.31%. Dividends earned of $4.72. Market gain of $5.43. So again, Apple, we're going to close that gap, down over 3%. But again, we've been down 10, 15% on Apple. Costco up over 4%. McDonald's up over 8%. And Tesla is the only straggler that we're down over 10% in Tesla. But you know what we're going to do? We're going to close it. Okay. And last but not least, let's go to my stocks. My stocks year to date, my balance is $978.68. Year to date, money weighted rate of return of 16.44%. Market gain of $108.40. Dividends earned $10.74. That's actually pretty good. Let's see what we've been getting paid here, and that's pretty cool. Okay. Oh, and I didn't even notice that. That's actually a pretty cool feature that M1 Finance actually did. Let me see. We're doing this on the fly here. We'll go to my oldest portfolio, and then we'll go to our dividends. And then I wonder if it breaks it down. No, it doesn't break it down per. Okay, I thought it broke it down per pie, but it doesn't. That's fine. Okay. So again, with M1 Finance, what I did was I clicked on dividends, and then it went to the dividend income tracker, which I do like. So it gives the total income that you're expecting. So the total income of paid, pending, and estimate for the year, right? The estimate, so it gives you, so basically it's dividends earned, so what you earned, and then the estimated income. You add those two together and you get the $33.48. And then from the dividends earned, it's paid income, and then the pending income right here. It gives you an average here, and then it also predicts, or can predict, your next 12 months. Okay, so pretty cool feature. In addition to that, if you scroll down, you can see upcoming dividends, your ex-dividend date, the number of shares you have in said company, the dividend per share, and then that payment amount, which is pretty nice. This is a pretty good breakdown here that you can see. Okay, all right, went off a little tangent here, and we'll go to my stocks again. Money weighted rate of return 16.44%. We talked about the dividends and the market gain. Still in the green for all of my sectors here. Technology is basically front end the load here. AbbVie though is as well. AbbVie has been on a tear, and I think it's almost at its near all-time high for AbbVie as well. So this was a pretty good selection by me in terms of the stock. When I consolidated all my earnings, I did pick just AbbVie for my pharmaceuticals. Consumer staple, restaurants and food, industrial energy, technology, just doing everything that it can right here, and even real estate with O's doing what it does. Dividends earned $3.20 from O. You can't beat that with the amount of money I have in that position right now. O is just a money printing machine. All in all, this is a very good portfolio that I have. I'm very proud of this portfolio because it went through its ups and downs of consolidation, but you know, it turned out really well, guys. So with that being said, we'll end week 75 at $3,097.07. Dividends earned at $22.06. Money weighted rate of return of $12.14. If this video was helpful, feel free to like, subscribe, comment, guys. Thank you, and as always, happy investing.